Hi everyone, welcome back to Beers podcast. So today is Wednesday where we discuss a book which is related to investing. The book I have today is Who Moved My Cheese. So this book is basically about keeping the eye on resources and sensing that when it is going to deplete. Two of the characters will predict when it is going to deplete, and two humans will not be able to predict.
Two are mice, two are miniature humans. The two mouse characters, Sniff and Scurry. Sniff detects changes early. Scurry will take quick action and respond to change.
Yeah.
Then the two miniature humans is Hem and Haw. Hem resists change because he's scared all the time. And because of it, he suffers. Haw initially hesitates but then learns to adapt to change over time, realizing that leads to new opportunities.
Okay.
What are the main stories in this book? What it revolves around is one, change happens. Change is inevitable. This world is full of change. Second is anticipating change. You should learn how to anticipate change. Getting ready for the cheese to move.
So how can that be applied to the investing in share market?
Yeah, so in the way is the same thing applies in share market. If as a value investor, you should be able to anticipate change. The market is always changing. The market is not constant. Today you might hear some news and make some investment. 5 months from now that might change. Global scenario changes, like the Israeli conflict. Something might happen and it leads to change. So you should always anticipate change. Meaning you should be agile. You cannot be sitting around thinking nothing will happen, and if you have that attitude, you'll end up yourself into trouble. Second thing is, not only should you anticipate change, you should be able to adapt to change. So your plan, whatever investment plan you have, should be flexible.
Okay.
So if any change happens, which you think might happen, starts happening, your plan should be able to change and adapt according to that. So you should have high adaptability. Third thing is, risk is part of the system. The risk is life. Everything in life has risk. From anything you do, from getting up in the morning when you get out of bed itself, is full of risk. So you should overcome that fear. If you do not conquer your fear, you'll be frozen in fear. You'll be in paralysis. I'm not saying you should not have any fear. You should have fear. Fear is good. Fear is a warning sign. But at the same time, you should not allow fear to rule you. You should learn to respect your fear, but not allow fear to run your life. Then 4 is monetary environment. What's happening in the market? What's happening
like
in the world?
US market. And
Yes, not only US market. Every single situation in the world can have a ripple effect. There's an old theory called the butterfly theory. That means butterflies on the other side of the world flapping its wings create disturbance in the atmosphere.
Impact in the other side of the
it creates a cyclone in India is created by butterflies in the North America by flapping its wings. Yes, I mean it is a theory, meaning not a theory. It is more like a imagined scenario to show you that every action has consequences. Everything is constantly moving and changing. So that's why it's important to monitor the environment. Then the fifth thing, which is like they say, move the cheese, is you should always be ready to see as a value investor where the pockets of value are. Those pockets of values keep moving. So like that's why Anand says PE is one way of looking at it. So you keep an eye on the PE, monitor that. That is your cheese. So you keep paying attention to that, or whatever metrics you use. So that way you can always see. And sixth, I would say, is enjoy the adventure. Life is meant to be lived, right? It's not, even if you have $1 billion right now, there's only so much of it you can spend and enjoy. So remember to enjoy your life. Remember that the whole point of investing is to also enjoy it. It is playing the game as part of the fun. That's why all great cricket players who don't care really too much about winning and losing. Yes, they want to win, but they don't mind the losses either because it was still an enjoyment. It was to play with friends. Most Pakistani and Indian players historically used to be close friends. Like Wasim Akram and Ravi Shastri, they used to do commentary together. So, though you may have rivalry on the ground, off ground, everyone will get along. So, that is the sense of adventure. So, to keep that in mind and always be reminding yourself, things will always keep changing. That is the fundamental story behind this, I would say, is to be ready for change all the time as a value investor. This is the way you can take Who Moved My Cheese and apply it into value investing. Because I feel every single opportunity in life, you can take it and see how you can apply it to investing. Why do I say you should do that? Is to constantly tell yourself how to invest, to keep it fresh in your mind. By keeping it fresh and light in your mind, you will be able to apply those lessons when you're investing. This is only for people who want to be investing. By people who just don't want to get into value picking and share picking and all that. For them, mutual funds, as I always said, passive funds, and forget about it. You can apply this to other.
Not do any market research.
No, you don't have to, because someone else is worrying about your cheese.
Okay.
because you don't want to think about that cheese. You have other cheese to worry
Mm.
about. You move on to those things, and you passively keep investing in the index, and you'll make your returns over a long period of time. This is more fundamentally for people who want to do stock picking, who want to do value investing in terms like Warren Buffett is doing, or what Anand is saying. Then you can apply these principles of change and being agile.
So in a particular point in this book, when the cheese depletes, the two mice will move to another place where the cheese will be there, but the humans will resist change. And how can this be applied to the share market?
This is very true in the share market, because if you take the mice as FIIs and you
Okay,
take the two humans as domestic investors, you and me, FIIs always are constantly selling and moving. Every 6 months, as a dollar
It
rupee.
will be like a bird in a tree. It will have the better view of the market.
Yes, and they are not only investing in India, they're investing all across Asia. So the same FIIs are investing in Singapore, the same FIIs are investing in Korea. So they see pockets wherever the opportunity is there, and they're moving in. And as soon as they see a better pocket, they leave this and move to that other pocket. Well, we tend to buy something and then wonder why did we make a mistake. Like PG Invit. Might have bought it at a high now. Then the sunk cost fallacy kicks in and you don't want to let go. So we have to learn.
Want to see the profit.
Yes. We make mistakes. We learn to overcome those mistakes by admitting to ourselves that we made a mistake and moving forward.
Okay.
So there's no other way. So once you make a mistake, there's nothing else to do but admit the fact you made a mistake. And the hardest critique for everybody is themselves. No one is hard on you like how you are to yourself. Even your wife will not beat you the way you beat yourself.
Because you did it by yourself. You began it. That I will invest.
Because you are the one who had the highest expectation in your adventure. Right? You thought you were going to get gold.
Because finally you see many people earning money through share market.
Yes. So that kind of motivation will always lead to anxiety. And when things don't go according to your plan, you feel very upset. That is because you're resisting change, or even better, there are some people who think they can create change, which is even crazier than this, where you think you control the market. That's crazy. I don't know how to help those people. So
every minute changes in the market. They think they can control the market.
Yes, that they know better than the market. Even Warren Buffett doesn't come out and say, I know better than the market. Nobody can. So, but for those people, my sympathies are with them. But it's a good book. I highly recommend it. What Arun has brought
is a very short book. You can read it in an hour.
Yeah, if you have not read books and you need something to start with, it's a fabulous book to start with, and I highly recommend that you read this book.
The English will not be complicated. It
not
will be
at all.
Simple English.
Very simple, very easy, very interesting, very fun. Some of the parts of the books are really hilarious, and you really enjoy it. Because you'll see parallels in your life. You'll see these characters in your own life behaving like him and her.
Even at some point, we'll relate to one of the characters mentioned in the book.
Yes. So that way, it'll open your mind to new possibilities and new way of thinking. Not only in value investing, in your office, in your relationships, in any facet of your life, it can help you.
So this session might have helped you with your learning and how can a book can be applied to the share market. If you have any book which has to be discussed in the Berich podcast, do mention in the comments. We'll discuss in the upcoming videos. So if you like this session, please like and share it with your friends and subscribe to this channel for more videos. See you soon.
Thank you.